Mark from Blunhouse Technical Analysis, and we're here for another edition of Chart the Markets with a special thanks to our FEG token and Smart DeFi sponsors, as well as BYDFi Exchange, who, as usual, will give away two trading bonuses to anyone with a lucky winner of a UID, which is a user ID, from BYDFi that's registered under our link, and that link is available in the Twitter posting that you may have seen. It's available on the @BluntHouseTA YouTube page in the description. You'll find it all there if you want to sign up. It's a super slick exchange, and I suggest you give it a look. What we're doing today is we're going to be looking at, this is probably looks a little different than you're used to seeing, and that's because this is the FEG chart. I think this is a 4-hour from smartdefi.com. So smartdefi.com does have their own exchange, and this is what you're looking at on your screen right now. Now my wallet's not connected or anything like that, but you can see how you can connect your wallet for a seamless DeFi experience right on the exchange. The interface that we're looking at is thanks to TradingView widget, which you'll see on pretty much any exchange that you go on to. Even my Interactive Brokers has the TradingView platform now. So it's pretty much everywhere you're going to be trading. So it's not a new experience every time you try and set up a chart, at the very least. So what we're looking at here is the 4-hour, and this is paired with BNB, and it's a wrapped BNB. That's what the W is. And it's a simple Heikin Ashi chart with the parabolic SARs that we've shown before, stop and reverse. There is a 20-day moving average in green, a 50-day in blue, the 20 is in red, the pink is 500, and the amber is 1,000 days, but on the 4-hour chart. We have a T-line and a 5 EMA, just like we do on all of our other charts. So if you're thinking that, oh boy, if I go trade on a different exchange or something, it's going to be a completely different methodology and setup. Well, it's not. It's going to be exactly the same. And if you're trading this pairing of FEG, you would trade it no differently than we talked about before. What are we looking for if we're using this Heikin Ashi trading methodology? If you're looking to go long, you're looking for a solid green candle with no lower wick and a parabolic below price. This would be your entry candle. This one here has a wick beneath it, so it doesn't qualify. It's suggesting we wait for here. And if we really wanted to, again, use our T-line in 5 EMA, well, you can just kind of look for the cross. Take the candles off, look to see where it crosses, and you'll probably find that it will confirm what you're seeing with your Heikin Ashi and your parabolic setup. And we trade these things no differently. You start riding up the T-line in the 5 EMA, and either as soon as you start to go flat and there's no more price appreciation happening in that wave, or you start to see red candles or the parabolics flip, that's usually time to get out. And then just wait for the next wave. This is simply kind of a nice ebb and flow. Right? Here we're starting to get, again, this would be your entry candle, solid green candle, no lower wick, parabolic beneath price. This is one that you'd really like to see challenge the 20 and even break it and start heading for the 50. Right? This is how you ever wonder, you look at the chart and you go, darn, I missed that move. Right? Well, if you don't have too much on the go, in other words, you're not trying to chart and trade 20, 30 different assets, but you have a few things that you focus on all the time and pay attention to, and use your alert systems that you can easily use on TradingView, you're not going to miss much. You're really not. Whether you're using the Heikin Ashi setup or you're using our trading script, you shouldn't be missing too much. And everyone's, best scenario is finding the earliest, safest opportunity, right? That's kind of what you're being told here. And if this does pop, then guess what? You were in it long before it really started to move. And when they do start to move, what do you look for? So if this candle starts to catch a bid, price starts to trend higher, we're going to be looking to do what? First off, we want to break and challenge the 20-day moving average on this 4-hour chart, which we haven't quite done yet. So that still needs to happen. We have to keep in mind that first attempts find resistance or can fail. So that also has to be top of mind. But let's say, for example, we do break the 20 and we do start to move higher. What are we looking for? Well, if we break one level, we're looking for the next. In this case, it's the 50 on this time frame. But we're also looking for those benches of past price, right? Areas where buyers and sellers have shaken hands in the past, because those areas are a draw for current price, because current price revisits past. So here we have our 50-day moving average, this bench of past price on the 4-hour. Time and price will come together, and this area will come into play, assuming that you break out from the 20. So the way that we read these things is really no different. Okay? But I think, I got a lot of messages from the group when we did the stream where we used Heiken Ashes, and we were talking about trying to keep the simplicity involved, right? Because everyone's saying, wow, this actually, in combination with the script, like this thing is bang on, right? It works really well together. So when I start hearing that from you guys, especially people that don't reach out very often, I know we're kind of onto something. So we're going to spend a little more time today too reviewing that. When I'm asked how I approach things, and especially in regards to the simplicity, I want to try and keep it as simple as I can, like everybody would love to, but that's an easy say sometimes and a hard do, right? So where do we draw the line between something that makes total sense and something that makes no sense, which we're going to find every day? And I basically have 3 principles that help me weed through all of that. 3 pillars. And you've heard me talk about them before. Fibs, Fibonacci's, fractals, which is multiple time frames, and filters. And those filters are things like what we use here with the T-line and the 5 EMA, and a couple other things, and one of them I'll show you today. But those are the 3 pillars that I'm using. Fibonacci's, the fractals, multiple time frames, and the filters. I want to take the noise out of the chart, right? And the Heiken Ashes, by the way, are a filter. That's what they do. They smooth out the chart. Are they great for price analysis? No, but they're great for trend. So when we look at fibs, and what I'm showing you here is a daily chart for Monero. And the only reason I'm selecting this chart, and obviously I've looked at it in the past, and I've drawn a line here at this bench of past price, and something that you've seen me do before. But I do like how it kind of came out of a nice consolidated base and then had a nice move up. And it was really the perfect example of where we could apply some Fibonacci's, right? Because those Fibonacci's help us determine where a retracement may settle. And just as an example, if we take this kind of swing low here, I'm going to take the low wick. We're going to take the wick. Some people like to take the body. I take the wick. And we throw this up here. I'll leave the volume profile up for just a second. So from this large move here, this big swing, 618 is at 276.02. Very much in line with this consolidated bench where I had drawn a line in the past that I thought it might want to come back and tag. Now that I see 618 within a hair of that little bench that I drew, do I feel more confident that perhaps price might want to visit that area? Yeah. Why else do I feel that way? Well, price got to the point of control on the volume profile and started to roll over. And when it was going to roll over, there's a gap here. And that gap has a small shelf in and around 618 and where price has been in the past along that bench. So the Fibonacci's are telling me, hey, this is kind of a place of where there's been enough pain and you might want to get a reversal. We've already had a 50% pullback on it. So we're just waiting for the rest to see if it happens. But just as a quick example, that's how you can use your fibs to get an idea of pullback levels. And you overlay these things with your other tools. For example, the volume profile. So when you see price failing the point of control, knowing that there's a gap beneath with a shelf all around 618, that should get your attention. Then you should be watching to see if in fact there is, a larger pullback in play. And actually we do get a sell signal on the daily. But what does this look like on other time frames? Well, we can actually, before I skip this, let me take this off, because here's your next thing. So you've measured the pullback, you know where 618 is, we know it's in here. But just as an example, let's go the other way. Let's take the swing high and we measure it to the low, because we want to know, hey, if price was to go higher, where may it want to go? It may look for 618 up here. You have three options: up, down, and sideways. Right? That's our three options. What does sideways look like? Looks like this. Right? Nothing really fun going on here. That's the chop. This is the breakout. This is the breakdown. That's the job in a nutshell. Right? Trade the breakouts and the breakdowns. If you want to accumulate in these areas, that's what they're good for. But really, we have one job again, and we all know what that is. It's to monetize the chart. Do we care if price goes up or goes down? Not necessarily. We just want to be able to trade it profitably and safely. That's it. This is going to be as simple or as complicated as we make it. And as human beings, we have a tendency to make things more complicated than they need to be. What can we learn about this 4-hour chart? With the exception of some minor impulses up and down, it's been range bound. And the stuff that we want to trade over the longer time frames are the moves like this. Right? You want to long these and short these. These are fun and they look monumental right on your screen, but you have to keep in mind that this is just consolidated trading. Tradable, yes, but not the monster moves that we like to see. But everything is fractal. This weekly chart, to me, makes me feel like this level is a little more likely. Why? Because what we see down here is the point of control on a weekly chart, and that's a long way away. Like, that's a scary way away, but yet there it is. And we know that current price is drawn to past. So, does this chart look toppy on the weekly? Absolutely. Is it still under? Believe it or not, it's actually still under a buy signal. And as parabolic as this move down was, it never actually drew the 5 through the T line to give us an indication that the trend was changing. But it looks like this. How many times have we seen this, right? The failed bounce rolls over, takes out the previous wave's low. Why is this kind of stuff important? Well, because if you wanted to buy some Monero, do you not want to buy, or anything for that matter, whatever it is, if you want to buy X asset, why would you buy it here when it really does look like this chart wants to roll over a little bit? Is it because you're impatient? Right? There might be a better place for your money or something while you wait for this to play out. But if it's patience, you're not going to make money by being impatient, because this is how you end up with a portfolio of assets that have been depreciated. It's that, buy the dip mentality. Well, you can buy the dip all the way down, and I get it, but I'd rather just wait for the dip. Just wait for the damn thing to be done before we start throwing money around. Like, patience is a virtue. And this could easily be a 5-minute chart or a 15-minute chart. It doesn't matter. This chart, look at these big parabolic candles and look what they've done. They've created this humongous gray band that's outside of the value range. So for as parabolic as the move goes up, the move can come down equally as hard. So when you look at the weekly, you'll understand why fractal analysis is important. The weekly, to me, still looks like it has some to give away. And what we see on one time frame, we see on another. If we break down here, we take out this low, which we're kind of doing now. If you don't catch a bid, what happens? We look for the next low, and so on until enough buyers come in to stop the fall and try and take price higher again. It looks like on the 4-hour you're making lower highs. And when you're making lower highs and lower lows, well, it's probably a bigger problem. But if you break on the 4-hour, you break that lower value range, that's going to be problematic. Because probably what it wants is somewhere down here, right? If it slips into this gap, we've seen this so many times, if price slips into this gap, it'll happen quick. We've seen it time and time and time again. And we catch these things on the shorter time frames. So when these big moves start, we'll catch them on the shorter time frame. Where did we start to see the 4-hour breakdown? Right up here on this, going into the daily wave, right up here. So there's always a clue. And the clue, again, on the 4-hour chart, look at the upper value range. Right? When you start seeing these rejections, you know this is a legitimate resistance level. Even if it's range bound, it's a decent short. But if it breaks on the way down, when you look at that weekly chart, it makes you feel like that's a possibility. That's how you end up catching a runner. That's how you end up catching the runners. Being at the right place at the right time. And in my experience, this is, using just a methodology that's scripted out helps keep it simple, and it helps keep you honest. And when we look at, as far as filters go, let's just go back to the daily for a second because these moves are nice and clean. The question you get each and every day: when do I buy? When do I sell? When do I buy? When do I sell? When do I buy? When do I sell? That's what everybody wants to know. But nobody wants to make that decision for themselves, right? Because it's scary, right? Especially when you're first learning. So how do we help give you the confidence and help validate your decisions? Well, we just lay it all out for you right on the chart. Take away all the other indicators. Take out a volume profile. Take out your stochastic RSI, your MACD, your Fisher. Take out everything and just work with what you're looking at here. When the chart or the market confirms a buy after a long period of consolidation or accumulation, whatever you want to call it today, you should feel pretty good about taking those signals. Are they all going to run like this? But no, they're not. Not every single one. Maybe 10, 15% of them will do that. But when they do, they'll be memorable. And you'll be able to say that you were in the right place at the right time. Not by second guessing yourself, not by front running the chart, but by doing what you're told. Green means go. Right? Green means go. And how do we filter all the noise off this run? Once we finally convince you to just do what you're told, right? Even in consolidation, these are pretty easy moves to take. Not runners, but clear moves. Green means go. You get the divergence between the T-line and the 5 EMA, and then what starts to happen? We start filtering out all the daily BS, the up and down volatility, the stuff that makes a trader of any experience sometimes a little bit mental, unless you can filter out the noise. That's what we're doing. We're filtering out the noise. So we've given you a green as grass go signal. There's your green light. We're showing you how to filter the daily noise and volatility by just allowing price to follow the yellow brick road. Right? Just follow the yellow brick road. That's all we're doing. Price is going to ride up these levels in a nice clean trend move. Pretty simple. And when do we exit the trade? Well, you have a couple options. When you see your 5 EMA turn red like this, or you see these two equal tops, or a big red candle, or you wait for your sell signal. But somewhere up here, you've got 3 days to make your mind up before you even, get the signal. I shouldn't say that. You're probably 2 days before you get the signal, but that'll be flashing on and off for you. After a big move like this, you'd be super happy to take your profits off. But the point is, however you decide to manage the trade, you can't say you didn't know what to do. Green means go. We gave you a buy signal. Take it. Don't outthink yourself. Take the signal. Watch price ride up the 5 EMA and the T-line. Filters out all the daily BS. Even through this consolidation, does it stay diverged, these two levels? Yes, they do. Do you get closes below the T-line even? No, you don't. All enough to give you reason to stay in the trade. You have to trust your charts, right? Or trust your chart's read of the market and your interpretation of it. But at no time should you have been considering to sell anything until up here. Pretty simple. One job, monetize the chart. It's not to debate some guy on Twitter. It's not to overthink something in your own head. It is to monetize the chart in the most simplest, safest, and effective way. And to further take out noise, we can use our Heikin-Ashi candles. Like, it's a great way to take the noise off the chart. Now, on this move with using Heikin-Ashis, our script gave us a confirmation here, and the Heikin-Ashi confirmation came the following candle. Did you really give anything away, even if you were to wait for the Heikin-Ashi confirmation all the way up here? No, I don't really think you're thinking about it a couple months later, after probably having one of the better trades you've had, right? You're not thinking about that. So sometimes the risk and the volatility is self-inflicted, right? And what I'm talking about is the entering and exiting trades. Why are you in the trade in the first place? Have you started your trading journal? Have you documented everything that led you up to this point to click buy or sell? If I was to ask you 3 hours after you made the trade what time frame you made it off of, could you tell me without looking at your journal? I know the honest answer is probably not, because you were looking at the 15 before you made it on the 1 hour, but you're basically baking it off the 15, and then you've changed time frames 12 times, and you have no idea where you started. And you didn't book a stop, and you didn't book an exit. This is the self-inflicted pain. No one can tell me that this part's hard, right? The fibs helped us. They told us everything that we really needed to know about retracement levels and opportunities of, I still think that we could end up down here. But we can't say we didn't have a clean slate to what we should be looking at, because it's all there. The problems that a lot of us have, or a lot of you have because you tell me, are the self-inflicted ones. And they also happen on the damn small time frames, right? So if you're on that, the 5-minute chart, the 1-minute chart, the 3-minute chart, get the hell off that stuff. Even just for a while. And start trading longer time frames, so that you actually have an opportunity to start to apply the things you've learned in a meaningful, thoughtful way, and not in panic because you're working off a 1-minute chart with the understanding or belief that you're going to get rich that way. Short time frames, high lev, whatever. No, you're not. It doesn't work that way. At least not reliably all the time for everyone. So work off longer time frames. Wean yourself off the shorter ones if you have to. Go from the 1 minute to the 15, and then from the 15 to the hour. Even the 30-minute is a nice clean chart. But get off the short time frames and lighten up the leverage a little bit, and just be able to start to apply these things that we talk about all the time in a constructive way, so that you don't get knocked out of your trade or stopped out before it even has an opportunity to materialize. So take this trade. This is a great long, and as long as it's doing this, because this is what you're going to see, folks, right? Is all you're going to see is price moving up like that, one day at a time. We're seeing the closing candles, and price just continues to rise up. This is the simple doing what you're told methodology. Right? That's your short Heikin-Ashi confirmation. Here's a big fat red candle with a very small upper wick, which should tell you everything you need to know, and your 5 EMA has already sensed the fade and shown you that in here. There's no reason to be long anymore. So you go short. You're not arguing with yourself once, a trend move is done and you've monetized it to its fullest and now you want to short it. That doesn't mean schizophrenic. It just means that you're monetizing the chart. That's a good thing. But it's pretty simple. Like it really is simple. There's your buy signal. You have two different ways to interpret it. We know how price rides up. This is filtering all the BS and telling you that the trend is good. And the parabolics, to some extent, are doing the same thing. Not hard stuff. It just isn't. And when it comes to filters, they come in different ways. Now, I know a lot of you use Bollinger Bands. Right? Let me just clean this up just a touch for 1 second. So a lot of you use Bollinger Bands. And Bollinger Bands are great, I suppose. But what do they tell you when you look at them? What do they tell us? Let's see if I have... Here's the Bollinger Bands. Well, they give us a real idea of the upper ranges and lower ranges of where price has been. And obviously to the left, you'll see that consolidated area. Is this something that most people can find effective to trade? Like, no disrespect to John Bollinger, I understand what he's trying to do or what he's done. But for me personally, it's just giving me extremes. And I guess it's filtering to a degree, but it's not filtering enough for me as a trader that I can use it in a meaningful way. And if you're looking at your Bollinger Bands, the settings for Bollinger Bands usually come as 20, right, for the length, and the standard deviation is 2. Most Bollinger Bands that you click on any screen will show you that. And this is how it appears on your screen, basically showing you the upper and lower ranges. That's it. So let's just alter this a touch. So I'm going to take the standard Bollinger Bands off, and I'm going to put mine on. So I have changed the settings within my Bollinger Bands. And now I'm working with something that my trainer called momentum bands or momentum breakout bands. And he's probably spinning in his grave that I'm sharing this with you. But what do they do? Well, if we go back and talk about Bachelor, right, who is the filters guy in business math, financial math, it's basically because of him that we have mutual funds and indexes and ETFs, because of his work, which was done like 100 years ago. But he was fascinated with market noise, fascinated to the point that he was trying to filter it out all of the time. Right? So what did he do? Well, I've tweaked these bands based on his math and his thesis to filter out noise. And now, instead of having bands that just give me this extreme range, I now have a tool to tell me when I am breaking out and I am in a momentum trend. That's what they do. So this tight, these bands being super tight, price is going nowhere. Now there's a few people that are in my Telegram group that have heard this kind of stuff before, so bear with me as you hear it one more time. But it's allowing you momentum breakout bands. That's what they are. And if I throw on just quickly, just, to make, just going to throw a 20 and a 50 on. This is what I live for. Green candles off the 50 as a momentum breakout. I can show you data. Rick Martinelli from Stocks and Commodities magazine in 2006 did a study on this very same thing. Green candles off the 50-day SMA have like a 98% success rate and outperformance rate of pretty much anything else out there. Green candles off the 50 as a breakout of the momentum bands are hugely successful. And as another mechanism to filter noise, to help you as the trader understand when you're on the right side of a trade, it's another tool that you can use to determine just that. When price is trading on the outside or within the bands, like you see here, you're in an uptrend. When you start to see the flat appear, right? Points and flats are indicating changes in direction, and that's what you're seeing here. The upper momentum band flattens out. Price starts to fall. In this case, it was actually pretty hard. It fell through it pretty quick, broke the 20, break one level, find the next. There you go, right? First attempts typically fail, back to the 20. You guys see this stuff all the time, right? It's not magic. There's no crystal ball here. It's just a handful of rules and some very simple tools. Not to sound like Dr. Seuss, but fact. All of these simple things that we teach here, when you overlay with each other, they're just a very powerful kit. Right? But this is just another example of filtering noise. So this is a moment, I just love this. So this is a momentum breakout right off the 50. Again, I'd wake up early for this. And then when you break, right, and you can't see, notice how you don't break out of the bands. Let me take this other stuff off real quick. Price breaks the band, so now you have a momentum breakout to the downside. Your retracement higher does not escape the momentum bands. And it's telling me as the trader that I'm still in a downtrend. Price pulls back, makes another attempt, fails, where? Right at the upper momentum band. And what else do we know? We know that when you have these failed breakouts, you move down and you take out the previous wave's low, which we've done. And notice how price is managing and its relationship with these bands. And we know that this thin red line is the point of control for the volume profile. Right? Fibs, fractals, and filters. All of these things. Here's another example of a 4-hour chart, the same asset. There's our consolidated area, and price just walks right up these bands. Simple. And this is a breakout to the downside. So you know sometimes when we look at the 5 EMA and the T line and we watch how price reacts when it gets close to those areas, you'll find something similar here, right? Look how it's respecting the lower band. Can't break out of the bands. And the divergence between them stays intact. And when it pinches like this, little pro tip, when it pinches like this, you are typically looking at a potential change in direction. And if we throw back the 20 and the 50 again, just to give you an idea of where, oops, there you go. So we broke one level, we found the next, basically melted down and just not able to catch a bid, right? You're staying inside the momentum bands to the downside, you're not moving up yet. Here you go, here's your start to break out right at a major moving average. In this case it's the 20, which is great, where you find a little bit of resistance up here at the 50, ultimately fail it and come back to the 20, and then the whole thing starts all over again. And again, as we're looking at these things, and this is what happens to our brains, right? We're looking at these things one candle at a time, hoping that we're making the right decision each and every candle, if in fact you're looking at your chart like that. But you don't have to. You don't have to. Just set targets. Let's do that as an example. There's always a target. There are always targets. Let's just put the full spectrum on here. So if you were trading up here, and guys, we do this every week, right? There's no T-line, there's no 5 EMA, all you have is these momentum bands, 20, 50, and 200 MAs. So we know that we're trading above those three. Those are the three major moving averages that I'm always going to have my eye on. And we're trading above them, all of them. So at some point you have to know that you're going to come back and at least tag the 20. Because the horse doesn't like to be too far away from the barn. Nothing goes straight up, nothing goes straight down. And price, oscillates between these levels. So we know that when you fail one level, you're going to find the next. So up here is your short opportunity, right? It just is. Let's just throw the 5 and the T line up. And you start to see the 5 EMA shows you the fade, you break. At this point, you're just figuring, okay, I could come back and tag the 20. Well, you sure do, but you split it in half, and you know that since you've broken it, you're going to look for the next level down. These are the targets that you should already have set. So just hypothetically, if you're short up here, this level could easily be your stop loss level, because you can see the relevance of those two tops on these candles. The 20 MA would be a target to take profit if you're short, or at least, again, be aware of what happens here, right? Because this is a situation that, well, we did get a bounce before, so this wasn't the first touch, which you'd even have to be aware of that. So you're probably thinking this could break, which it does, right back to the 50. And lo and behold, where do you end up? Pretty much right back to the 200. Break one level, find the next. There's nothing in here telling us that you should be out of this trade. No matter if you're using the T-line, the 5 EMA, or just the momentum bands. This is easy stuff. Where it gets hard is the self-inflicted wounds, because you're trading super short time frames with super high leverage that just knocks you out of a trade before it even gets started. Look how relevant this is. This is the 500 MA on the 4-hour chart. Do you think price is respecting that? Looks like it. And what is that? What does that represent? That's over a year, right? It's like 1.2 years. That's what it's representing on a 4-hour. So price is telling you that there's some support there at a meaningful, with a year's worth of price history that's getting some respect. And if it was to break it, I guess we could call that disrespect, and we know what it's looking for on the way down, right? Fails here, it's going to be looking for these lows. Takes those out and it still doesn't catch a bid, well, we're going down here, and then that's how you end up at this lower level where all this price has been before. But we don't have to use anything super scientific to do this. We really don't. Fibonacci's, fractals, which is multiple time frames, and filters, right? Filter out the noise. Great example of what that looks like here. Whether we're just using momentum bands, the T-line and 5 EMA, and our signal script, you should be able to trade this. Understanding a handful of rules that we have. Current price revisits past, how price reacts to the volume gaps. First attempts typically fail or get support depending on which way price is going. Just a handful of stuff. And what price is drawn to, right? To the left is a lot of past price on Monero. And at some point in time, it's going to have that kind of magnetic effect. So, any questions on these things? Like again, I'm just trying to keep it as simple as we possibly can. This is a Bitcoin 4-hour chart. Let's take a lot of this junk off here. So guys, if you have questions, you just blurt them out. So don't worry. It's not like you're gonna offend anybody. And there we go. Okay. So simple 4-hour Bitcoin chart with Heiken Ashes, the volume profile, and this is the level that we've drawn out before. And lo and behold, here it is, still waiting to be tested yet again. Now, this is another example of, and some people have reached out to me today really struggling with this move on Bitcoin. And I don't know, I really don't understand what the struggle is. And the struggle is thinking too much. It's as simple or as complicated as that. You're thinking too much. These are people with really good entries, and they're excited about the move that they've been able to capture. But all of a sudden, they're when they've got something to lose, they start to overthink things. Right? This daily chart, these are Heiken Ashi candles, yeah, but it's pretty damn safe. Right? It just is. Is price trading north? Is it above the T-line? Yeah, it is. Are we still operating under a validated buy signal? Yes, we are. Do we have a draw for past price at this resistance level up here at 110.7 and change? Yeah, we do. Moving average and signal line on the MACD is still above zero. Yeah, the histograms are fading a little bit, but it's still above zero. So as long as we're trading up there, above this level, we are still in a bullish move. We're still in a bullish move. And just want to flip up our momentum bands, we're still within this upward trend of these bands. Now, this isn't an indicator per se. This is I've gone in and I've adjusted these things. But it's just something that I use as another tool to filter the noise out. Because I'm no different than you guys. I hate that stuff. It used to make me absolutely mad. And I admit that. My brain is such that I would want to overthink everything. Right? You're going to learn about yourself doing this, by the way. So my brain is such that I would overthink absolutely everything. And I didn't have any guardrails that I could use to help me filter out the nonsense that would keep me in, a good trade. Right? So that's basically kind of what I'm sharing with you guys. Right? Is just the basic stuff that I use every day in the simplest of forms to help me determine when to get in, when to get out, and then once that decision's been made, how to manage the trade and how long to stay in it. That's it. We have one job, and that's to monetize the chart. We're indifferent to price on whether price goes up or price goes down. We are. And if you're, managing your risk properly, and I can already tell you that I've been stopped out of this trade. So if you're managing your risk properly, there's very little that can go wrong, right? It's when we don't do that. It's when we take on too much risk, short time frames, high leverage, not taking the time to be a professional and making the appropriate notes in your trading journal on what you're doing, when and why. That will also help you look back and reflect when you have those tough times and those tough trades, right? The ones that just don't go the way that you want them to go. But filtering out the noise, using your fibs, that's all you need to do. Fibs, fractals, and filters. That's my approach, right? And then understanding the behavior of price, where it goes and when it goes. So this is a stock, and it's gone nowhere but up, and it's a biotech. I love charting this because I think it really shows us in real time what monsters look like. This thing is one of them, right? Now, here we are trading into this kind of, you're well above the upper value range, right? The market doesn't care, and this is where fundamentalists and technical traders sometimes lock horns, is that I don't care as a technical trader whether you make money. I don't care how many people you employ. I don't care. None of that stuff matters to me. All of those things get picked up in your technicals, I believe. Like if all of this was true, only a company that makes money would have its stock go up, but that's not the case. Companies that lose money have their stocks go up each and every day. Most often in an unjustifiable way, I grant that, but it happens all the time, right? All I know is that this chart's toppy to me, and has been for a little while. And it may have the best product that's the world's yet to see, and all of that could be true. But all I'm saying is that this chart has been toppy for a while. This doji up here, for those that watch this, you may not watch it, doesn't really matter. A little floating doji way up there at the top of a trend. And this is a daily, so it's not going to take you long to see what was going on, right? Starting to sense the fade. You know that you're trading, well, I don't know that, but I'm going to look. We're trading well above the 20, the 50, and the 200, right? Yep. So we know that when we're trading above those three, that at some point in time, we're going to come back and tag it. It might tag it, and then you get a continuation higher, or not. What did we just do here? For those that pay attention, we took out the previous wave's low. We broke one level. I'm inclined to think that we'll find the next. And where is that? Right in the middle of a volume gap in an extended area well above the value range. And again, you've got your upper value range way down here, which kind of connects some past price, right? Right in here, and then this in here. Doesn't matter what the asset is, it doesn't matter the vertical that it's in, all of these things apply the same way, whether it's a commodity, whether it's a stock, or whether it's crypto. Taking out the previous wave's low in an extended area above the value range, when you've broken one level and you've found the next, chances are you're looking for the 50. You are oversold a little bit, but, and that could, we know that the stochastic RSI can drag down here for a very long period of time. So does it mean when you see these things that it's, the end is nigh and everything's, the story's written and it's all over, write the book and close it? No. These are just normal price patterns, but they're normal price patterns that you can trade. So whether you see this on Bitcoin, whether you see it on Ethereum, whether you see it on IBM, I don't know, I don't care. Tesla's going to break somebody's heart. Why do I say that? So if you long this thing with the expectation that it's going to take out these highs, I think you should be very, very careful. So what are we looking at? A gap down here, gap down here. This candle, today's candle, hasn't even made it back to the 5 EMA, never mind the T line. And it's in the middle of a bloody gap. Like, this should be easy, right? It should be easy. What it's struggling with is this little bit of a shelf. There's some stuff to eat up there, but it should push, but it's not. And we know that when you have these impulse down and you can't take out, your snapback can't take out the 5 or the T line, as all these are just green candles in a downtrend. That's it. That's it. Let's look at our stochastic RSI. What's that tell you? This thing's hooked over. Not hooking up. It's actually rolling over. Fisher transform, what's it telling you? Wants to move down. We know this thing doesn't play games with us. It's pretty truthful, gives us nice clean signals. What about our MACD? The MACD on the daily has broken the moving average and signal line with these big ass red histograms, which is reacting to your price movement. So, this is why it is important to learn how to read price on a chart. Now, I heard a rumor this morning that somebody in the social media space made a big trade on Tesla. We're going to see if they're right or they're wrong. When you see price do this, and listen, we're going all the way back to January here, folks. All of this, each and every day, was just lost hope. These were not trend-changing candles. Why? Because they were trading below our filtered level that we use all the damn time to tell us whether or not we're in the right side of the trade. Let's go to today. We're just trading well below of these levels. Well below of these levels. You don't think that the 20, the 50, and the 200-day moving average, while you are trading below, under a sell signal, with snapbacks that can't break the T line, i.e. this one hits its head on the 50 and then shits its pants. There are a lot of wealthy people that are wealthy to spite themselves. Maybe they had somebody else read price on a chart for them. This, boys and girls, is why you're here, to learn how to read price on a chart. I would not make this trade right now if it were me. That's just me. To me, we talk about mitigating risk here, right? It's not just hitting the home runs where you make money. Sometimes the best trades are the ones you don't make. I don't go long when my stochastic RSI wants to look like it wants to roll over. I don't go long when my moving average and signal line are breaking zero on my MACD. I don't go long when I'm gapping down and I can't break the 50 and or the T line on the snapbacks. That's not how I trade. That's a fool's trade. If in fact you have the expectation that it's going to go parabolic from here. I don't think so. Maybe I'm wrong. Maybe I'm wrong. That's okay. I've been wrong before, and I'll be wrong again. There's your point of control. There's your lower value range. This, and they're tight, which means what? It means that they are representing large concentrations of past price that we know are a draw for current price. And we know, as choppy as this shit is, we know that this is the downward trending. Are we making lower highs here? I think so. Premature. Way premature. And again, I think I could be wrong, but I don't like the smell of that. And let's look at on the weekly. What does the weekly tell you? We're working under a sell signal. Yeah, it literally just came, ironically, as we get this green candle. Now, do you think it's an accident that this green candle is wedged between the 20-day and 50-day moving average on the weekly? No, it's not. Not at all. Do you think the draw for price is up or down on this weekly chart? Anyone? I don't really think it's up. I believe what you're going to end up doing, this will be a failed breakout, and we're going to come back and take out this previous wave's low, in all likelihood find yourself way down here at the point of control again on the weekly. And we can come back in 3 or 4 weeks and check to see how we did. Does this stochastic RSI to you look bullish? Because you've seen more than one of them in these streams. Answer, no, it's not. How about this? No, if you've been in here more than once, you know that that's get out of Dodge. And how about our MACD? Moving average and signal line on the weekly are rolling over right above zero while you're fading your histograms, which is the price sensitivity. Is that bullish to you? No. Not to me, anyways. Is there a small trade there? Yeah. You're gonna get rich on it? I don't know. This, to me, looks like it's gonna get spanked. That's what it looks like. With the big draw for price down here at 250-ish. Do we want to get any more friends? I can go to the monthly for shits and giggles. Well, what do we see? Are we still working under this big buy signal? Yes, but you can see that we have started to, this is the monthly Tesla chart. We're going to close below, unless something happens this week, but it looks like we could close below the T line. And our 5 EMA on the monthly is showing us a fade signal, and we have the 20 and the 50 waiting below. So if we roll over, what are we going to be attracted to? At the very minimum, the 20-day and or 50-day moving average. And when we line that up, do we get a significant amount of past price that we can start to average out in there? Sure, we sure can. And if you fail and you roll over and you take out this previous wave's low, well then isn't that how you get to the 50? Yeah, it is. So we shall see. But I do not believe that this is a successful trade. Let me put it this way, there's more risk here than I would be willing to take, because this could reverse on you super fast. And how do we find out if it's going to do that? We drop our time frames down. Same thing we do on everything else. Okay, is this a little more helpful? This red line is your 200-day moving average on your 4-hour chart in the 20. Did you notice something? Look at the divergence. Even on these big snaps higher, there's not enough to change the trend. And you pull right back to the 200. And this current candle can't, at least now, is unable to break the 5 EMA. And if it fails, it slips back down here into this gappy area to bring it back down to the 200 again. And we know the draw is down for the point of control. So again, this is why you're here, to learn how to read price on a chart, so that you don't make massive mistakes. Yeah, we want you to be successful and we want you to have lots of wins. But what nobody sees in that other column are the trades that you didn't make, because they would have turned out to be disasters. Sometimes it's just as important to remember the ones we didn't make and why, as it is to remember the ones that we did make and why. Right? I don't like this Tesla chart. This is romper room technical analysis 101. The 200-day moving average is your bull bear indicator, and you can see how relevant it is. And you've failed it yet again, and you failed to 50, and you can't break the T line, at least not yet. So I think this is a slippery slope for this trade. So that's that. Do you guys want to look at anything else? Let's look at Solana, because I know there's people in here that love to trade it. There we go. Solana's daily. If you didn't believe that your major moving averages were giving you support and resistance levels, you should now. Right? Again, a 200 AMA is your most basic bull bear indicator. You're trading above it, you're bullish. You're trading below it, you're bearish. So here we are, going sideways. 3 choices: up, down, and sideways. And this last week has been pretty range bound, right? This is kind of got shoulders here. Anyways, you're very range bound. You are above the 20, but you're just chattering right between the two. And once you break out, you're going to create a little bit of a wedge in here, I'm sure. And then once you break out, you're going to have an answer. The upside opportunity is the 200 MA at the upper range of this gap. And the downside risk is rolling over and failing the 20, and then taking out this low. And if you're doing that, I can't see why it wouldn't come down here and tag that too. So that's the downside risk. Sideways, upside opportunity, downside risk. And if you choose to trade the downside risk short, then it's downside opportunity. I don't care what happens to price here, if it goes up or down. I just want to be on the right side of the long or a short. That's it. One job, monetize the chart, right? We don't care about what happens in between. This is YM, which is the contract for the Dow Jones. This is a daily chart. Volume profile, upper value range, lower value range, point of control. Have we pulled back enough to drag the 5 EMA down through the T line to give us a confirmed sell signal? No. So just when you see, and the reason I'm pointing this out is because when you see this, it doesn't necessarily mean the sky's falling. Right? So if we look at this chart, okay, this is really our first significant pullback in a while, kind of since we had this big move up. We either find support here at the T line and then get a continuation and then take out this high, or if you fail the T line, what do you expect? You expect it to somehow work its way down to find the 20, break one level, find the next. And if it doesn't hold, you're just going to start checking them one at a time. But it's just another example where I always ask you, are you trading above the 20, the 50, and the 200 MA? And by the way, the more price is away from those levels, the harder the pullback, which, and if you like to trade short, the greater the opportunity. So, let's face it, folks, you're at all-time highs. Right? You're at all-time highs. So, adding some shorts or positioning, to take advantage of a potential pullback, not a bad idea. And where do we think price is going to go? Well, because we understand how it behaves and how it moves around certain areas, we know we can expect it to come back. Time and price will come together and find the 20. We know we have a volume gap here, which makes it a little more doable for price to fade into it and then slip all the way down to the point of control, which is sitting on what? The 50-day moving average. Fail one level and find the next. Price will find these levels. Nothing goes straight up forever. And I think that's one thing that we will, as a group, kind of learn over time, that when things do pull back, they're going to pull back with some vigor. And I personally believe that the longer we continue to push all-time highs in this environment, I think the likelihood of an unwind that might be more violent than people anticipate goes up. Again, more just opinion than anything else. Let's look at what we looked at last week. I believe it was last week, the 10-year. This is the 10-year Treasury. Let me take the volume profile off because it doesn't like it. So, this is a monthly chart. U.S. government bonds, 10-year yield. Way back here in 06 and 07, we kind of tagged this 5% level. As all I've done is I've drawn a horizontal line right across the top of the 5 EMA on the monthly chart. Again, all I'm trying to do is just kind of capture some tops and level them out where there's some consistency. And lo and behold, what did we tag? Way back in 23, we tagged that level. And then as soon as we did, everybody said, oh, you know what? Rates are going to pull back again. But what really happened, and this is why fractal analysis is so important, because if you're not looking at the right time frame, it's real easy to get lost, because those shorter time frames, they might look so exuberant that you'll miss something obvious. And if we look at this monthly time frame, when we did tag way up here near 5 and we pulled back, because all we did is pulled back to the 20, just like I just showed you on the other chart. Here we are on the 10-year. We just pulled back to the 20, but nobody's talking about it like that. To me, what is this? This is a continuation signal. When you pull back, right? There's one bounce. You're expecting the potential of something soft, right? Because it's already tagged it once, although it didn't literally tag it, but it came darn close. But nevertheless, this turns out to be a continuation off the 20. And is all we've done, what are options? Up, down, and sideways? Is all we've done here is gone sideways on the 10-year treasury. There's the most current candle. Why is that interesting to me? It's interesting because if rates were going to roll over, I think they would have done it by now, first off. And this setup to me simply looks like impulse up, consolidation, and then move higher. Eventually, we get a move off the 20 here that allows us to take out the previous wave's high. Now, most people are saying that's not going to happen. No. The conditions are not set for that. Treasury this, Fed chair that. I don't give a shit. How's that? I don't care. I don't care what all these people say. I don't care. Stop trying to tell me I don't give a shit. This thing, as far as I'm concerned, is heading back up to 5%. I'm not saying it's going to stay there forever. I never said it was going to stay here forever. I never said oil was going to stay at 61, 66 forever. I'm telling you, it's going there, whether you like it or not. And we can sit in Twitter spaces till we're blue in the face, listening to real smart people pontificate about life, when in actual fact is all we have to do is just look at a friggin' chart. Just look at a chart, dude. And if you can't read one, find somebody who can and ask them to teach you. Because it will help you more than you can ever imagine. There's 61.66. Did anybody want to believe that oil was going to $61.66 when it was 95? Nope, they didn't want to hear it. And they gave you all kinds of reasons, and me all kinds of reasons, why my number would never come to fruition. Why you can't use technical analysis on commodities and all kinds of horse shit like that. Spoken by true people with so much knowledge and so much experience. Learn how to read price on a chart. Block out the noise. There will be people that will try and tell you constantly that you can't do this, that you're not good enough to do this, that you're not smart enough to do this, that you need someone who's professional to do this. And if you get beaten over the head with it long enough, maybe you'll believe it. Maybe you'll believe it. And you'll stop taking the time to learn how to do it right. And you'll start taking the time to learn the things that are important to you so that you can monetize the chart. All of this stuff is fluff that we hear. The things that we watch on the news, the things that we hear in Twitter spaces. Some of it's very interesting, don't get me wrong. But at the end of the day, I'm a technician. I read price on a chart. I have opinions just like everybody else of where I think should be happening, but I don't let that interfere with what I see on the chart. I do not believe in my heart of hearts that the market should be up here. I don't believe that, it's just how I feel personally. But that doesn't get in the way of the fact of what I see on my screen. And it shouldn't you either, right? The job is to monetize the chart, not to have an opinion that's right or wrong. No one cares. The only people that care are the people that want to argue with you on Twitter for the sake of arguing with somebody. A lot of them are really smart and have great perspectives. But then there are those that don't. What I think about, why oil went where it went, doesn't matter. Doesn't matter. is all that matters is what's happening on the chart. That's it. Do I love this weekly Dow chart? No, I don't. Not with the 20 and the 50 hanging out down here at 42.5 while you sit at 44.2. Are we trading above the 20, the 50, and the 200? Yeah. Does it make sense that we come back and tag one of them at one point anyways? At least as a tag to get a continuation. Doesn't necessarily mean it's going to be a breakdown. Yeah, it does. And whether you take it as a short up here, like if we come back, this weekly Dow chart, like you don't know what the next candle brings, right? This was a total meltdown. You didn't know that going into it though. But the only way you can be at the right place at the right time is to just follow your chart and do what you're told. That's it. This is not hard. I know it seems, and we talk about it all the time in other groups, that it's a new language, it's this, it's that. All of that is true, but it's not so difficult that it can't be learned, right? What we do in here is super simple. We use Fibonacci's, we use fractals, different time frames, and filters. That's it. Handful of rules. Understanding, what our indicators may be telling us. But don't be afraid about what you see on your chart, as irrational as it feels. That is probably the biggest trap, is that you can outthink yourself reading your own chart. Right? It's quite a phenomenon for us to do that, but we do it all the time. Right? It happens all the time. We know what the draw for price is. We're trading in an area that's pretty thin. And when price retraces, where may it want to retrace to? This is a real interesting chart to use fibs on. We can use this down here. So 618 is 39.9. If we take this, so that's a significant pullback. What's around 39.9? Let's try and figure that out. Interesting. So it feels like it's in purgatory. You have the 200 way down here, and you have the 20 and 50 way up here. So if it does fall, it'll fall hard, but yet the support level is up in here. So any other questions, guys? Or thoughts or experiences? Because we all have stories to tell, or battle scars to tell or show. There's the chart that I'm looking for.
Hey, Glenn, I don't have a question, but I just had, just wanted to touch on some of the things that you brought up earlier in the beginning.
Sure.
On the Smart DeFi site,
Sure.
that asset backing section.
Yeah, so thanks for doing that. So good point. So what you see on this chart down at the bottom, it says baseline price, right? And is that what you wanted to speak to?
Yeah, if you don't mind, I'll try to keep it simple.
Yeah.
But I just had a couple of notes here. Just the Smart DeFi's baseline value is a unique feature designed to ensure that the value of its tokens never decrease, and its value is ever rising. The baseline value can only go up, and it increases with every transaction because a set percentage of every buy and sell is given to the asset backing pool, which is secured inside the Smart DeFi token smart contract. Smart DeFi does defy the law of physics. When any tokens are sold, the baseline value goes up instead of down. And this helps eliminate pump and dump schemes, as the buyers know what the risk ratios are even before trading. To be blunt, it's smart DeFi is made simple and smart.
So does that would continue to grow exponentially, right? Over time, it just continues to grow, right?
Yes, sir.
Yeah, this is
Through every
actually
buying club.
there's a whole exchange here. Um, for so all you do is just kind of connect your wallet, and it's super easy to use. So so this actually we looked at this at the start of the stream, and I don't think we were anywhere near the 20. So here we are. We've actually moved up a bit, and this is what you want. You want it to break out here. I know it's the first touch and everything, and you get excited. But if you break out, you start looking at this consolidation in here, which is in and along your 50, and that's your target. Right? So remember, stop losses and exits, have them preset. Right? So that you can literally, like, how do you walk away from your charts? That's how. Right? Get a good entry, have a stop set, and set a target. Like if we were long and you wanted to set a target for exit, here they are. Boom, boom. Don't get greedy, just one at a time. Because believe me, price is not going to go from here up to here in one candle. It just doesn't work that way. So allow yourself the process of working through these things. Right? This is what it'll want. That's where you would consider having an exit. If it breaks out, well then you now have a new target, right? You're going to look for the previous wave's highs, which in this case is going to be also around the 200 MA. But there's a lot of stuff that's going to go on before you get up here, right? So that's why I'm saying don't leave your target up here. Chances are a lot's going to burn up in here before you ever get up there, and you want to make sure you've taken your money off since, or your profits. All right. Anything else you guys want to look at today? It's kind of a up and down day a little bit. Let's look at Bitcoin before we leave. Here's our 4-hour chart. Do we have some unfinished business up here? I think so. We know what the downside risk is, right? If this fades, you look to the upper value range, and then you look to the 200, which is in a volume gap. We know that this is an area of resistance up top here at, this is like 110.7. So we probably still want to make a run for that. And again, if you're trying to figure out where things are going, trying to get a little heads up, just drop your time frames down. Go back to the 1 hour, for example. And it's probably nice and clean. Notice the relevance of the lower value range. That's creating, and then the upper value range, so this is range bound. So you know you've got a trading range, which is a gift. But you have to, open the eyes and make sure you see it. Because that gift, those upper and lower value ranges, those gaps within them, that's your money. Like if you're not using a volume profile to trade in and out of gaps, you're missing out. It really is a great tool. And again, we can see, like, this thing hasn't given up yet. It's still bullish. You've got the 20 crossing up through the 50, not a big deal, but anytime you have, shorter term averages crossing up through longer term ones, it's usually an indication of some positive price movement. So we'll see where this goes. Once we test this level, we'll have an idea of what comes next. Okay. Any other questions, guys? If not, we can move on for the day. FEG to retire, nice to see you here as well, as always. But yeah, if you guys don't have anything else, we'll call it for today. Actually, no, we're not. One more thing. One more thing. I want to show you. So what you're looking at is it's a trend spider chart, and I want to show you Apple. And there's certain things on our charts or certain tools on different platforms that for whatever reason are as true and honest as the day is long. And for me, on TrendSpider, it is the anchored VWAPs. Now, these anchored VWAPs, that's this kind of purpley line here that you see, and it's measuring volume. And this solid blue one that you can kind of see, it gets thicker in some areas, that is measuring price. So that's the highest volume indication, and this is highest high for price. And as price was moving up on Apple, this VWAP or anchored VWAP for me was a target and also a significant test, because I was under the belief that price was going to run up to the anchored VWAP, which it often does, and then fade. And so far, it's doing exactly that. It hasn't rolled over, mind you, but it did fade it. So these anchored VWAPs for me on TrendSpider, for whatever reason, they seem to work differently, and I love them, and they're a real edge for me. So I was not at all surprised and anticipated the fade here, the move to it and then the fade, because it acts as a draw for price. Same will be with the other one at the bottom, which is measuring volume. Right? Also acts as a draw for price, so I would expect price to kind of bounce around those anchored VWAPs. And if we understand what they are, what a VWAP is, so volume weighted average price, that's what the VWAP stands for. And the VWAP was developed for institutions so that they could show their institutional clients that they were able to get good value. So if you were able to say to your client, hey, we got you $1 million of XYZ below the VWAP, that's going to make your client feel real good, and it's going to make your firm look real good. You don't want to be the one to say, oh yeah, we got you 1 million shares of X over the VWAP. Right? Whole different conversation. But that's what it is. It's volume weighted average price. Anchors are slightly different, but they do act as draws for price, and they're fantastic. At least these ones are. So anchored VWAPs on TrendSpider, well worth a look. And it's an excellent platform. It just doesn't have the feeds, I guess, that maybe TradingView has, but it makes up for it in other ways, and I use them both all the time. So again, here's our 1,000-day moving average, by the way, on Apple. What is 1,000 days on a daily chart? Like, it's a lot of time, right? That's a lot of time. And price is bouncing off of it. There's a message there. Like, that's almost 4 years of price history, and price bounces. That's a good thing. We want to come back and test it again to see if it bounces again. You don't want to have to, but you might. You probably will. It's just like oil, bouncing around with 1,000 days of price history. Did anybody really want to talk about any of that? No. This chart only shows a little bit. There's the 1,000-day. You're failing. Shows better on our TradingView charts. Why am I not excited about this move on oil? Because it has it has a long way to go yet. Right? It's not out of the woods yet. Simple. And where's your anchored VWAPs? Here's your anchored VWAP for price, and here's your anchored VWAP for volume. Daily chart, crude oil futures. Simple. Anyways, guys, if there aren't any more questions, we can wrap it up for today and come back on Thursday of this week to kind of see where everything is at. And if you are a winner of the trading bonuses, you will see it show up in your account, and you'll probably get an email as well telling you that it is there. So if there is nothing else, we're going to carry on with our day, and we will check you guys out on Thursday afternoon at 12 o'clock. Thanks, everybody, and we